Hi guys, and welcome to Sylvia Berrock with sylviaberrock.com. In today's video I'm going to share with you one of the simplest trading strategies out there which nobody uses. So let's start right away. Step number one is find a stock with a clean chart in an uptrend. After that, step number two is add EMAs to your chart to identify the trend direction of the stock. Step number three, draw support and resistance lines. Step number four would be to buy near the support lines and sell half of your position near resistance lines. And the remaining step is basically managing your position with trailing stops based on the moving averages. So I want to share that with you visually, and we're going to go through some examples in order for you to understand what I mean exactly with that. So let's say you identified your trend and we have an uptrend here with higher highs and higher lows. Now you have to identify the support areas. You identify the support areas when you look at the chart and see where is the previous breakout of the resistance point. In this case, we have a breakout here, and this becomes a support area. After the high, we saw a little bit of a pullback into this support area. This became the low now, and this acts as a support area. After you identify the support areas, you can start looking for some reversal candles or consolidation areas around those support areas. The idea behind that is just to buy near support areas, place your stop just below the support area, and take your profits or partial of your profits near resistance area. Now, if you don't know what is a resistance area is the previous high. In this case here in our example, this is right here, and this is the place where you should start selling partial of your profits, and you can use trailing stops for the remaining position based on the EMAs. So after you know how that could look like, let's dive in and see some of the charts. We have here the chart of Dokyo. This is a very good example in my opinion to identify support and resistance, and I want to share with you how good this strategy works in those growth stocks. As you can see right back here, we saw an uptrend, and then after that we built a low. This here became our support area. In this case, you could have put your stop just below the support area and start longing this stock. The resistance area was here the previous high, and you could have started to take some partial profits and use those moving averages as a trailing stop. I personally use the moving averages 9, 20, 50 and 200. So depending on what are you currently trading, are you more shorter term oriented or longer term oriented, you can use different EMAs for trailing stops. For example, if you're more a shorter term trader, you can use the 9 EMA in order to trail your stop to the upside. So in this case, we saw it worked pretty well, and you could have kept the whole stock until up here where we saw a little bit of a breakdown. And here at this area, we saw a little bit of support again. This started to consolidate again, and this was also a great example where you can start buying again the stock, again at support area, and put your stop just below this support area. So we had a nice opportunity here. After we broke above the highs, the stock pulled back, as you can see, right at this support area. And we saw a reversal green candle. This was our perfect entry where we could have started our long position, and the stop would have been just below this current price. We saw a little bit of a gap based on the earnings, but just for our example, I want to share with you how you can keep the stock and trail your stop above those moving averages. Another example for another entry would have been after the stock pulled one more time into that support area, and you could have started one more position or a new position here at this place and started to scale out of your positions or trail your stop based on the current market situation. Another great example for support and resistance areas is AMD. AMD broke out of the 48 area, and as you can see here, this here became the 48 area became support. The stock pulled back into the fourth area and tested it a couple of times. So in this case, this would have been as well a very great example how to start a position around the support area. $48 is our key number here, and at this area you start to look for some doji candles, some consolidations, or some reversal candles which would indicate for you an entry. In this case, we could have started our position right here at the doji candle and continue to hold the position into the resistance area. Those previous highs which I'm drawing here are the resistance areas, and this is the point where you should start closing part of your position. The remaining part, like I explained in my example, you can leave and you can use trailing stops based on those moving averages. So in this example, you could have realized half of your profits around the resistance area, and the other half of your profits you could have hold it and just basically using this EMA, which is the 9 EMA in this case, and you would have been stopped here. So you are risking here a very small amount of money in order to make those huge gains. And those patterns happen over and over again. I'm going to share with you one more chart with you guys just to explain you how easy it is to find those setups and to trade in this direction. Another great example for our support and resistance areas and buying at support is Adobe. I really like this stock and I traded it a couple of times. That's why I want to share the chart with you and to show you how easy it is to find those stocks, to identify support areas and start buying around those levels. As you can see here, the 347 was the breakout point, and this became here at this point also support area. The stock broke out, went a little bit higher, and after that it started to pull back and came right into the support area, which was, like I said, $347. As we can see here, we saw a little bit of a doji candle, which is also a reversal candle, and this was the indicator and setup for us to start buying around those levels. The stop could be placed right below the support level, and you can start scaling out of the position on the current resistance levels, which in this case would have been the 372 area, and you can leave your remaining position based on the moving averages on the chart. Like I said in my example, I used the 9, 20, 50 and 200 EMAs, and you can use those as a trend indicator and as an indicator for your trailing stop. Based on this example, you could have held this stock over the whole way until here, where we started to see closing below those moving averages. This was the 416 area. So you are basically here risking a small amount of money in order to capture those big moves on this stock. Another great example, and my last example for today, is the stock Alibaba. BABA has a great growth potential, and as we can see here on this chart, we had several opportunities for buying around support areas. So let's take a look where were those support areas and how could have this trade worked out for us. As you can see here, this was the previous resistance, which is the 215 area, and we broke right above, and after that the stock pulled back and started to consolidate here with 3 candles, which are 3 reversal candles. Actually, this is a great example and great setup how and where to start buying around those levels. You could have started around this area and put your stop right below the support area and see what happened the next day. The next day the stock gapped up and it continued to go. Only in 4 days it went straight up without any news. It was just based on the chart, and after that it started to consolidate. In your case, you could have even started to add around those new support levels here, and you can start managing your position. Guys, this is something a little bit more for advanced. I want to share with you in this case only that you can buy around those support levels here. After that, you keep identifying new support levels. You keep scaling out of your position and closing half of your position around those resistance levels, and use the EMAs as well in order to realize the remaining profits. As you can see, you can capture huge moves based on this simple strategy, and you can find it in a lot of charts. I encourage you to keep practicing that. If you want to know more about stocks like that, don't forget to subscribe to my free watch list. I'm sending every week my top 3 stocks, and they include technical and fundamental analysis. It's a great way to see the markets and how I view the markets and learn from me. Thanks for watching, and bye bye.